great to see we've got a pretty wide range from across the country. So very excited to dive into to today's topic. We'll try and touch on as much as we can. If there's any specific questions, we'll also have Q&A at the end. So kicking things off, super excited to bring you this session on navigating SR&ED in 2026. Really what we want to go through is what's changed, what we predict to change, and how you can maximize your claim. As you know, there's a ton of areas that you may not even realize are possible. So we have our amazing head of claim solutions, Ali Afshar. Ali, I'll let you do a very quick intro.
Hey everyone, thanks Sarah. So obviously my name is Ali. I have a background in engineering myself. So by practice, I was electrical and computer engineer. I worked as an engineer for a few years before transitioning to SR&ED, and I have been helping companies of various different industries and different fields of sciences claim and get the benefit of the tax credits in the past 10 years.
Awesome. Thanks, Ali. Ali has a ton of experience with the claims side. So if you have questions at the end, definitely reach out to him. We'll share his contact information as well. And then I'd also like to introduce our guest, Brian Watson. Brian, I'll let you give a quick introduction as well.
Sure. Brian Watson here, long in the tooth in the innovation ecosystem. Used to run the National Angel Capital Organization, so have been on the capital side. Have been a partner at a SR&ED firm in the past, so have banged my head against CRA audits and helped many companies over the years. And then more recently have been more on the finance side, actually financing SR&ED R&D tax credits. And doing a bunch of work on the policy side which resulted in some of that work resulted in the changes that were in budget 2025-26, which we will chat about a little bit later. So, finance, SR&ED, policy, and a bunch of clean tech stuff that is not relevant for this.
Perfect. Thanks, Brian. We will flip over to the next slide. So to kick things off, just to kind of help our speakers get an idea of where everybody's at in terms of their SR&ED journey, we have a couple polls. So Natalie from our marketing team is going to pull this up. Feel free to answer those if you can. The ones that maybe aren't eligible, just skip over them, but it's really going to help us get an idea. So the first one is, have you filed SR&ED before? If yes, who helped you file? So was it your general accountant, maybe an internal resource on your team, or a SR&ED specific consultant similar to Employment Hero? And then do you feel that you left money on the table? So do you think that you claimed everything that you possibly could, or do you think maybe there was something outlying? And then lastly, as Brian touched on, we're going to chat a little bit about SR&ED financing, how you can get that money sooner. So we'd love to get an idea of who has claimed that before. We'll give it maybe 15 more seconds. It seems like there's still quite a few responses kind of coming through.
It's interesting, Sarah. The left money on the table question. So many clients when they came to me back in the day, we'd look through their evidence and, well, we couldn't justify that because we didn't have the timesheets. We couldn't do this because we didn't have that. We didn't think it would stand up in an audit. So it really does. So much money gets left on the table just because the substantiation, the evidence isn't there. It's really it's quite sad, especially with the nature of raising capital these days being a little more difficult than it used to be.
Absolutely. Okay, so it looks like we have a pretty split group in terms of who's filed SR&ED before. So 57% yes, 40%, 43% no. Most have kind of split between doing it internally or with a SR&ED consultant. And the money on the table, again, most feel, fairly split, 60-30 in terms of no. And then financing SR&ED. So most people actually haven't heard about financing SR&ED or filed it before. So with that, I will kick it off onto the next slide, Natalie, please. And I will pass it over to our speakers to kind of run us through what today's plan is.
Awesome. Thanks, Sarah. So yeah, we did the quick intros. We'll talk about, the SR&ED program in general. I saw that it's kind of a 50-50 between those of you who already know how it works and what is SR&ED and how to claim it, and 50% don't. But yeah, so some of this might be repetitive for a bunch of you, but keep in there, because I think some of the information can also be new based on what's changed and everything. So we'll also cover that, and then maybe share some insights in terms of the latest reviews and the theme that we're seeing the CRA are imposing in the past couple of months, or actually past year maybe. And then some tactics in terms of how you can maximize your claim and get more credits while you're working on it. At the end of the session, there's going to be some time for Q&A, but if you have some questions, feel free to, put it in the chat, or, along the way, if there's any questions, just pop it in there and I'll try to keep an eye on it. So why are we doing this? Obviously, SR&ED is pretty important. It's probably one of the few ways that you can access non-dilutive funding for a company that is trying to grow. It gives away a ton of money per year, so 3 billion plus. I don't know if that's an accurate number, might be more or less. Right? What do you think,
Four and a
Brian?
half last. 25 is 4.5.
4.5, and I think 2026 the budget has increased also. So even more money on the table. And in 2025, we saw some similar themes between the companies that we were trying to help claim SR&ED, that basically changed the way that we thought and changed the way that we used to do claims. And we saw that claims were taking more time. There were more audits. So we'll talk about that in more detail. And then 2026, big changes coming, and I think Brian can speak to that later on in the presentation. So today we're going to try to clarify what has changed, how to give you guys the confidence to claim everything that you're entitled to, and also how you can walk into a review session, or for example, submit your claim without worrying about it in the first place. And move on to the next slide. Okay. So let's talk about the SR&ED program in general. As I mentioned, it's a federal tax incentive program. Now, the main difference between SR&ED and all the other grants that you might hear about, like IRAP or else, is that SR&ED is SR&ED. Let's break it down this way first. SR&ED stands for Scientific Research and Experimental Development. So essentially, it's a program based on the scientific work that you guys do. So that science or field of science that you're working can be of any type. Most of the field of sciences do qualify. So the one that is most common, and I think most of you guys can probably relate to, is software engineering. That's the field of science that, for example, you're interested in and can submit claims in. But yeah, so it's a scientific program intended for companies that are, let's say, building a new product or improving an existing product. And so the main difference between the SR&ED program and the grants that you hear about is that SR&ED is backwards looking. So it's a retroactive program. You're spending a bunch of money to achieve a goal that I mentioned, like improving a product or building a new product. And then at the end of the year, if your project qualifies, then you're automatically entitled to get access to those credits. Where in grants, it's a forward-looking program. You're applying and competing against a bunch of other companies. And at the same time, if let's say if you do qualify and if you do get access to the credits, then you're getting it for a project that you haven't worked on yet. You're planning to work on it next year or in the next few months. So that's the main difference. I talked about the name of the program, Scientific Research and Experimental Development. It focuses mainly on the technological aspects of the work that you guys are doing. So there's a bit of a separation between the product that you're developing from a marketing standpoint and how novel it can be. So it goes a layer deeper, right? So it goes into the technology that you're using and the intricacies within that technology and the field of science and the advancement that you make. The program is available to Canadian-controlled private corporations. So what that means is 50% plus, and of the ownership is Canadian, and others. So others is pretty wide. You have non-CCPC or non-Canadian controlled, 50% plus are not Canadian. But at the same time, so when you apply, there's a bit of difference in terms of what the percentage of refund is, how much you get back between a Canadian company and a non-Canadian company. Most recently in 2026, there was a major improvement also to the program. So previously, Canadian public companies couldn't access or could access these tax credits, but they were considered as a non-CCPC, or they were getting the same rate as a non-CCPC. From 2026, correct me if I'm wrong, Brian, but like I think they're also being treated the same as a Canadian controlled private corporation, so they get that advance rate.
Yeah, I mean, we'll talk about it in later slides, but basically, yes, you're correct. With one tiny caveat that I'll add in there, that legislation is part of the budget bill. That budget bill is in basically a committee. It's been passed by the first couple of stages of the House of Commons. Basically, we need royal assent, and then we need updated forms. But yeah, that new definition is going to be a really important one. The argument there being, why should your source of capital, if you're a Canadian company, why should your source of capital, public or private, matter in terms of the government supporting you? In terms of updated forms, for public companies, I know they've been working on them. The SR&ED Directorate has. Sorry, I just saw the question there. The capital inclusion, which we'll talk about some of the other changes. Some of the other inclusions will be fairly easy. The ECPC definition, the draft legislation is out. It's going to be a little bit, I suspect it's going to be a little bit longer to get that part of the form, whether it's a separate form or the pure T661. It probably will be a little bit longer, but like the clean economy tax credits, if you have to file because of timelines, and these do go back a ways, we'll talk about that later, then there's usually a mechanism in place that they put, not as clean as a form, but there's a mechanism that they put in place to claim the clean economy tax credits, even though there wasn't a form yet. So there will be a way, but some of the changes, we expect it to be fairly soon.
Awesome. Yeah, we'll get into more detail in a bit. So, okay, let's get into SR&ED. And how do you know if you have a project or not, right? So the three main criteria that we usually look for are technological uncertainty. So the order is a little bit, well, it can be interrelated, but it goes usually from this: technological uncertainty. Does it exist or not? Then you go into systematic investigation or experimentation. And then at the end of your project, you usually have technological advancement. So let's talk about technological uncertainty first. When I talk about the field of science that you're working in, let's say software engineering, let's say you encounter a problem and then you are thinking about how you can solve such a problem. If the knowledge that is existing in the public domain, as an example, if you can go on ChatGPT, or you can just Google your issue and you can go and you can read a bunch of people talking about it on Stack Overflow, or you have someone in your team or a contractor that you can ask how you can solve that problem within that field of science, then technically your technological uncertainty can be solved by leveraging existing knowledge that you can have access to. If the answer to that question is no, meaning you cannot solve that problem using that existing knowledge, then you have a valid technological uncertainty from a SR&ED standpoint that you can start working towards solving. And that from that moment onwards, you have your SR&ED project started. Another way that I like to put this, and I think it's much more simple to explain a SR&ED project, is imagine the world that we live in as an island, and all the information that exists around you are living within that island. And you come across a problem within that island, like let's say I don't know, like you cannot put on a fire or something like that. And nobody else knows how to put on that fire. And in order to figure it out, you have to get on a boat, get off that island and go and figure it out how to do it. As soon as you get on that boat, you can technically say, I've started my SR&ED project, up until the point where you figure out a solution and come back to the island and put out that fire. And at that moment, your SR&ED project ends. So everything that you do from the moment that you get onto that boat is considered systematic investigation. Let's say you have to make a right turn at some point, and then you have to figure out a bunch of components that you need to take with you. You have to experiment with them. All of that is considered systematic investigation or experimentation. You're trying different solutions, you're documenting it along the way, and you probably have to do that multiple times. So it can be iterative at the same time. And let's say you go back to the island, you try it, and you see if the fire is put out, great. If not, then you probably have to go back out and try to gain more knowledge. And you rinse and repeat until you actually do put out that fire. And once you do that, you've achieved technically a technological advancement. Another way that you can put technological advancement is basically what new knowledge did you gain? So all the knowledge that you've gained along the time that you were outside of this island is new knowledge that you're bringing to the rest of the people inside the island. So nobody else had access to this knowledge. Now you've brought some new information. So that can be applied in technically any different field of science, right? So software engineering, medical sciences, whatever you're working in, as long as the information that you're looking for doesn't exist in the domain that you're looking for it, and you have to kind of step off that island and do some experimentation of your own, that's your SR&ED project. That's your SR&ED problem that you're trying to solve, and then new knowledge gained at the end of it. So that's basically how you can, figure out whether or not you have a eligible project in the first place. Okay.
Yep.
Moving on. What can you claim? So going with the same terminology of the island, everything that you spend, let's say as soon as you get on that boat, all the expenses that you have to incur until you get back and solve your issue, that's what you can claim. So you might have to spend a bunch of salaries on the people that are trying to solve that problem for you. That's eligible expense. You might have some, let's say, material that you have to buy that along the way it gets destroyed or it's transformed in a way that it's not usable anymore. That's eligible expenditure. You might hire some contractors that are not necessarily employees of your company, but they're doing work for the project that you're trying to solve. That's eligible expenditure as well. So the key to all of this is that the expenditures that you're incurring need to be incurred within Canada. So if you hire a non-Canadian contractor that is doing the work outside Canada, it doesn't count. Same goes for employees. If your employee is based outside of Canada, it's pretty complicated to claim them unless they spent some of their time doing work in Canada and they were tax residents, yada, yada, yada. So it becomes very, very complicated. And I don't think today's webinar would be the best place to discuss it. So for the purpose of what we are discussing here as an eligible SR&ED claim, you need to have some sort of expenditure, either in forms of salaries or contractor or material, in order to be able to claim. You can also, let's say, pay a third-party institution to do some work for you that you might not have, control over what they're doing on a day-to-day basis. Let's say you pay a university to do some research for you. That is also considered part of the eligible expenditure that you can claim. Anything that I missed out, Brian?
No, we'll talk about some of the other changes in the later slides. No, that's good.
Okay, moving on. Yeah, so work that is eligible versus non-eligible. We touched on this a little bit, but to put it into terminology, developing new or improved processes is usually considered part of the eligible type of activity that you can claim. Any work that you do in order to overcome technological limitations so it can be like direct involvement, like development or testing, project management, those type of activities usually qualify. And then, as I mentioned, this can be iterative. So that experimentation can repeat. So employees or contractors can be involved in it for multiple months, or it can be just one iteration and done. Those are usually the type of eligible activities that you see. And typically ineligible things that we see is like routine engineering or configuration. And routine engineering is a pretty general way of explaining it, but the easiest way that we can differentiate routine engineering versus what would be considered as eligible type of engineering or novel type of engineering is routine is what you kind of look at as what any engineer is capable of achieving if based on the education and the knowledge that they have access to. That's considered routine engineering. if none of that really applies and they have to kind of do some work above and beyond of what is considered routine, that becomes the type of engineering that is eligible. Market research or usability testing, that is typically something that is not, eligible work for CRA purposes. And then commercial production, like anything that goes into the business and business logic, is usually something that we leave out. I think something that is not mentioned here is also a little bit of UI UX work that's, front end versus back end. Front end is typically something that we leave out, not include as part of the eligible work. However, there are some cases that you can also include front end engineering, and that's when you can kind of link it as part of the, let's say, if it's a requirement of the SR&ED eligible work to develop some sort of front end environment, then that becomes eligible. So it's best to discuss that with someone who has good knowledge on how to maneuver around the SR&ED eligibility scene and see how you can maximize your claim when it comes to the type of eligible versus ineligible activities. Okay. Okay, yeah, so some common projects and examples that you see in the SR&ED world. Obviously, I talked about software development. Hand in hand goes with it as AI or machine learning model development, some type of product design and prototyping, process improvement. But then above and beyond these fields of sciences, you have material or formulation research. You have hardware or electronics engineering. And then, when it comes to company specific projects, you can be working on internal tools and testing, experimentation, performance, and quality control innovations. So it really, there is no limitation in terms of what is the field that you're trying to claim your work in, as long as it can be linked to a valid science that exists within that SR&ED framework. So, I think the ones that are mentioned here are just a very small sample of what you can see, and most of them are software themed.
Yeah, I mean, I've had claims from dog biscuits, as I mentioned in the chat here, as I'm answering questions, to computational biophysics, to literally rocket fuel and manufacturing. And each of those has its own different technologies that could be limitations, its own foibles, its own nature. So one of the other benefits of working with a consultant is they tend to have a really wide breadth of experience in different industries, so they might be able to pick out different areas that you might not even think are SR&ED, but they can. So yeah, really, I can't think of an industry that I haven't had SR&ED claims in. So don't assume that it doesn't exist. It's always worth the question.
Thanks, Brian. Okay, so I mentioned that there's a bit more. I mean, this was always a challenge for companies that are claiming, is you're working with a team which are mostly engineers, and they have this responsibility of doing their work. And you kind of have to ask them, okay, now I want you to document everything that you're doing when it comes to project A and B. And that becomes a challenge, right? So I used to work as an engineer myself, and I hated doing time tracking or documentation, especially when I failed. Like, I didn't want to take a note of, okay, I failed like 10 times trying to develop this application that I was working on or whatever. It's kind of counterintuitive, but that's what you have to do in order to have a successful SR&ED claim. You have to document what you're working on in order to prove that you were actually working on it during that specific time period. At the end of the day, the SR&ED program is a tax program, and you're claiming the work that was done within a certain tax period. And so the documents that you have to provide in case of a review in order to prove that you were working on that project need to be time-stamped and contemporaneous. Now, a lot of companies don't do that. So what happens is they get to the end of the year and they're like, by the way, we needed to do such and such for SR&ED, and we haven't done it. So they tend to produce that at the end of the year, and that becomes retroactive practice. And so that retroactive narrative is being challenged by the CRA more and more often. what they like to see is show me any type of evidence. Honestly, there's no limitation in terms of what type of evidence you're showing. You can even show a photo that you took off of a whiteboard or a note or an email or a chat message that shows that this specific resource or resources were involved in a given project within a certain time period. So in a month of January of 2025 or whatnot. And if you fail at doing that, what tends to happen is no matter how strong your project is from a technological standpoint, because you weren't able to prove that you were working on it, your project gets denied. And you hate to have something like that happen. So the best practice to do that is do it proactively throughout the year. It doesn't need to be every day. It doesn't need to be every week. Obviously, the more you do it, the better. But it needs to be done contemporaneously. So you have to sit down every once in a while, monthly, couple of months, whatever it might be, and then document how much time you spent on a given project and link it to the existing evidence within your platform, right? So if you're using, let's say, Jira, GitHub, Linear, Notion, whatever it might be, make sure that you're keeping track of who is spending how much time on a given project and have those evidences linked to those resources and the time that they're spending on it.
Yeah, and that could be, I mean, it could be as simple as turning the record button onto your Notion and recording your sprint meetings. And I had one where we actually used to go through people's Slack engineering channels and look for swear words because we found swearing was highly correlated with failure. Why the bleep, 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 bleep didn't this actually work? And it was highly correlated with the shred. And if you can cross-reference that with the Git logs and what was blowing up, that's actually great evidence. It's triangulation. It's naturally generated. Because I don't know about anybody on the call, but I am absolutely horrific at remembering even yesterday. If you tried to get me to remember what happened 18 months ago on January 26th, it ain't going to happen. It'll be fiction. It might be fiction and not good fiction. So contemporaneous, it will save you in a CRA audit. Absolutely, hands down.
Yeah, I'll tell you a funny story because I had an audit just not a long time ago, and this client of ours, he was doing the same thing. He was recording all the meetings, just because so easy just to record, like on Google Meet. You can ask Gemini to take notes, and so when it came to the review session, the reviewer had some specific questions about the work that was done within the period and who was involved, and these days everything is AI. So he just put he asked Gemini to go and find notes related to that project of this specific resource who was involved, and it took like 10 seconds. And he had like all the sample notes of all the meetings that they discussed it, and that was it. So it's there's no, again, like there's no clear format that the CRA is like, I only want it this way, or your reviewer. It can be of any different form, but these days it's so easy to do it that you can just use any method that you're most comfortable with and start tracking your work that way. Okay, moving on. Okay, yeah, so bunch of things that we already discussed. Differentiating routine development versus experimental development is key here. When you're tracking the work that you're doing, it's essential to differentiate the shred eligible work versus non-eligible. So if you say, okay, this is the project that I was working on during the whole year, and that was, building financial advice tool that gives you such and such. That's the product that I was trying to develop, and I spent 100% of my time on that. That's a narrative that usually gets challenged, and it's pretty hard to prove that you spent 100% of your time doing SR&ED eligible work, because as I mentioned, SR&ED goes a layer deeper than the product kind of initiative that you have. We need to go into the existing software engineering practices and what constitutes an eligible work versus non-eligible work. That is the work that you do in order to solve the uncertainty versus everything else that you do. Now, if there was a way for us to say everything else that you do, which is routine engineering and like routine optimization, is a necessity in order to achieve progress in your SR&ED eligible project, then we have a way of maximizing your claim and say you spent 100% of your time and you can claim 100% that you spent on salaries. But if there's no direct link, then we need to find a way to separate the work that was eligible versus non-eligible. So when it comes to documentation, make sure that there's that direct link between the work that you did and the SR&ED eligible work that you did and the evidence that is existing within your domain.
Sorry, go ahead, Ali.
Yeah, go ahead.
Just two things on that. The 100% is an interesting thing. If there is a principle called the all or substantially all principle, where if you have, for example, a crazy, insanely smart data scientist who literally only spends their time developing algorithms for your AI system or what have you, and it's all shreddable, but you can't substantiate like 100% because nobody counts their coffee breaks and segments those out. The all or substantially all principle basically kicks in at about 90%. If somebody's 90% shreddable, they're basically 100% shreddable. So you will see 100%, and it's not wrong, but CRA allows for that because proving that last mile is almost impossible. The other note that I wanted to make is, and you may talk about it, so interrupt me, Ali, if it's later on, is support work and evidence for support work, because there's things like project management or QA and testing that don't necessarily always fit in the normal buckets for the development or engineering work. And it could be that the CEO is managing the project management, but you kind of go, well, I'm not really shred. Well, you are. You're managing that project, so it might be 5% of your time. But track that in the evidence, because A, you're probably being paid, which is a salary you want to include, and B, it's totally eligible SR&ED work as long as it is directly related to that shreddable project or projects, or and not raising money for the company or sales or something like that. So make sure the periphery work, that support work, is also tracked.
Yeah, and I see a question on, if there is other companies that are working on a similar type of problem, and they have the solution, but you don't. It really goes, the question that I would ask is, is there any way that you can access, like the knowledge that they gained and ask for any sort of tips that they can give you in order to achieve progress or whatever? In that case, then no, but if you do not have access to their problem, that's their IP, and you have to create your own IP without being able to cheat off of theirs, then you have complete valid project that you can claim.
Yeah, as long as it's not in the public domain, and they, so Google may know how to create the algorithm that you want to create. They may have their own version of it for your AI product or what have you, but if they're not going to tell you how they did it, just the fact that it exists doesn't mean that it is accessible to you, and doesn't mean that you can implement it. So if you have to experiment to figure out how to make that algorithm work, or that API talk to this API without data loss or what have you, just because it exists doesn't mean you can access it. So it's not in the public domain. So it's perfectly valid for you to undertake it as SR&ED.
Okay, I think this is yours, Brian.
All right. So we alluded to a number of changes that are happening with the SR&ED program, and this has been in the works for a number of years. Big shout outs to the Toronto Stock Exchange. I've been involved, CCI, and a bunch of others advocating for a number of changes to the SR&ED program, and we are hopefully going to see a few more of those come down in the 2026 budget regarding IP costs, patent box, and various other things. That doesn't exist yet, so there's consultations happening, but we won't belabor that. But what is almost real, almost legislated, and I'm hoping next week I'll be able to stop saying almost, because it's been about a year and a half, is the three changes that are noted here. One we've spoken to, Ali's spoken to, which is the ECPC definition, eligible Canadian public corporation, excuse me. And we've talked a little bit about that, so we won't belabor it, but it really does make it so that early stage public companies are able to access the refundable, i.e. cash back when you file your taxes, refundable SR&ED tax credit, which makes a huge difference to the cash flow of companies that, for whatever reason, business reason, had to list on a public exchange. So it makes a big difference for those companies, no matter what exchange they're listed on. If they're public, it can really hurt their cash flow position when they lose that refundable SR&ED every year, and it becomes a tax credit because they may not be paying taxes for quite a while. So it does make a difference. Second big change is the cap. Basically, as a company grows, there's a number of different things that happen. Their taxable capital starts to grind down the amount of refundable SR&ED that they can get, and there was a cap of 3.5 million, 3 million in the past. That basically, after that point, you started to become non-refundable, so a tax credit as opposed to a refundable tax credit, cash back. That cap has been raised to 6. Originally, it was 4.5 million that was announced in the 2024 fall economic statement on December 16th, which is an important date. But it was actually in the budget increased to 6 million, which is great. So for companies that are undertaking larger SR&ED projects, this means a heck of a lot more money that they can leverage in terms of cash flow. Which again, if you've got that, 6 million, 4 million, 2 million, even 500,000 sitting on the sidelines in SR&ED, and you're looking to raise capital or what have you, we have a big receivable over there. You might want to finance that instead of giving up equity, finance it with debt and a SR&ED loan. And with that cap going up, that means that larger companies can use some of those financial tools to manage their growth. And then finally, we're going backwards. We're going back to the days of capital. So in 2025, they removed capital expenditures from the eligible expenses of SR&ED. So in the past, for manufacturing companies, you needed a big machine to do something for your experimental process. That was dropped. But as of the date that all these announcements were made, the capital expenditures are back in. So you need a clean room, you need an oscilloscope, you need a piece of technology, piece of capital expense to directly undertake your shreddable work. That expense can now be included as part of your shreddable expenses alongside your salaries, which for anybody, software, less impact sometimes, but anybody in hard tech, anybody in manufacturing, drug discovery, biotech, medical tech, generally this is going to be quite a boon. Last point on this slide that I'll make is I keep referencing December 16th, 2024. That was the date that a lot of these were announced. These changes were announced and by Christopher Freeland. And then things went a little sideways and we ended up having an election and a few other things. So this got delayed, but the budget that was announced in November 2025 for 25-26, the draft legislation has all of these changes being effective as of December 16, 2024. So any fiscal year end after December 16, 2024, so anybody that's got a December 31st, 2024 year end that had capital, as long as the legislation gets passed the way it's supposed to get passed, it's definitely worth talking to somebody like Ali or Employment Hero around your historic SR&ED filings and your 25 filings, because you may actually have money from 2024's fiscal year for capital expenditures that you made that you can file what's called an amended claim for and recapture that money as well. So again, we need the legislation to pass, the budget to pass fully and receive royal assent. But once that happens, bend your mind a little bit towards what you did in previous terms, and certainly reach out to Ali and Sarah, because it will it could potentially be quite a lot of money that you'd be leaving on the table if you didn't revisit that history. And then actually the final point I'll make actually on the slide is the processing time. I love my folks at CRA. I really do. They're managing the SR&ED directorate's managing 93 billion of my clean economy tax credits. They're managing more and more companies every year, and they're managing all these new changes. Unfortunately, that creates a bit of a resource constraint in that they're not necessarily hiring a lot of new auditors, and the clean economy tax credits have a 100% audit rate, which means that if your claim requires any sort of interaction with CRA, things are taking much longer. So it is not uncommon these days for me to see on the little slider bar on your My CRA, your progress bar, to see that being 6 months. Again, this is one of the reasons why the SR&ED financing can come in handy, because again, you can borrow against that accrued amount that Ali would estimate what that amount is. We can finance that amount, and you can use that money while you're waiting for CRA to get back to you and get you your refund. So it makes a huge difference. December 16, 2024. See a question here. So if you purchase capital equipment anytime in 2024, that can be claimed, or December? Yes. So the answer is if your fiscal year end is after December 16, 2024, the way the legislation is written currently, and will likely be passed, is that, yeah, if you're a December 31st year end and you bought some equipment and it was made available for use in 2024, as I say, you're a December 31st year end, which is after the 16th, yeah, you should be able to amend your file, amend your claim. So it's when your fiscal year end is, not when you bought the equipment in the fiscal year. All right, is that one Miele here?
Yeah, I mean, so I can take this.
Okay.
We, usually basically the most recent experience that we've had, there's a bunch of reasons that your claims can get challenged, and then afterwards reduced or denied by the CRA. These are the most common themes that we usually see. So the first thing that they are, being selected for an audit in the first place are, unclear explanation of the technological uncertainty. So what that means is, let's say if you are describing a problem and say, I was trying to develop such and such application, but there was no method that I could just use off the shelf, and there was no tool that I could use off the shelf, and it goes from there. Then it's kind of general, and it fails to describe the specific issue that you were dealing with that didn't have any sort of existing solution in the public domain. The more specific you get, the better. So if you can describe and share some specific metrics that let's say you were trying to achieve a certain performance in real time or sub 5 milliseconds or whatever, but then the tool that you were trying to use failed to do it, and the best it could give you was 20 milliseconds. So you had to find a solution to close that gap. Then that's probably a much better uncertainty compared to the one that I explained earlier, which was too general. The second thing is are activities that are described at too high of a level. So let's say you're trying to claim such and such resource, but there's no specific information in terms of what they were working on. It's just a project code. So how do we know, again, like it goes back into the same discussion that we had earlier in terms of how do we distinguish between eligible and non-eligible work, SR&ED work versus non-SR&ED work. We need to be able to identify what they were working on specifically that made it SR&ED eligible. No evidence means no claim. So missing or weak evidence is definitely a problem. And then also overstated labor allocation. So if you have a team of some engineers and then some marketing people and some business development, and you claim everybody at 100%, that's a red flag. Then in terms of the project descriptions and what you submit, also every project that you submit on a tax year needs to clearly distinguish itself from the year before. So if you have projects that are repeating from one year to another, then what was the new knowledge that you gained? What was the problem that you were trying to solve that was different from the year before? It's fine for projects to continue from year after year, but you need to be able to clearly distinguish the work that you did in one year compared to the year before. If it's just a repetition, then there's no new knowledge gained, and that's not eligible SR&ED work. Claims that sound like product roadmaps, it's pretty self-explanatory at this point. Like we don't really, the SR&ED program is not really interested in the product itself, but rather the underlying technology and the science that was used to achieve that solution. And then, yeah, like just using buzzwords doesn't cut it anymore. At some point, these were all like cutting technology and like cutting edge technology, AI, machine learning, blockchain. But most of these are, these days they are fairly tested, and a lot of engineers and scientists have achieved, great uh, great advancements in new fields that didn't exist before, and we have access to a lot of that knowledge in the public domain, either in the form of papers, studies, or else just publicly available knowledge that you can just, let's say, download a tool and integrate it into your system. So those are also some of the issues that we're seeing.
Alia, your comment of no evidence, no claim is a good one, and I'll just say, I had, when it came to contractors, I had a lot of examples of issues where maybe the relationship had soured, there were some issues, they hadn't backed things up, but when you're working with contractors that are going to be a big portion of your shred, you really want to do a couple things. Make sure that they are tracking the evidence on your systems, so that you always have access to that evidence. Make sure it's written into your contract that the shred is yours, so that they can't claim it, and make sure you always get that evidence to substantiate your claim. Because in the end, CRA doesn't care if you don't have the evidence. That just gives them more grounds to dismiss it and increase their bonuses, which are based on something called TIBA, tax earned by audit. So there's a good incentive for them to cut your claim down. It feeds into their bonus structure. But you want to make sure that you're mitigating the risk of that, and contractors can be one of those areas of friction where the evidence doesn't necessarily naturally come your direction.
Yeah. Okay. All right. Back to you, Brian.
All right. So I talked about this a little bit earlier. In terms of the timelines and the changes. As I say, CRA is doing a lot of work to try and fix some of these issues. There was actually a mandate given to them in the budget that they must come back with a way to modernize SR&ED by April 1st. It'll be interesting to see what they come back with. There were some interesting recommendations in the budget on that. But anywhere, and it's with desk reviews, this was a part of the audit process that not a lot of people even knew existed. There would be accepted as filed, or you're in audit. Not a lot of people realized that there was actually a middle step of somebody at CRA just has to sniff your claim, and does it smell like SR&ED? Yeah, that looks like SR&ED. We just want to make sure. But that interaction with humans at CRA is taking a lot longer these days. You won't necessarily even know it's happening. You'll just see that slider bar, a progress bar, taking 6 months. That's where there's a lot of elasticity in the processing time right now. So your best offense, again, is a good defense of having all that evidence ready so that you can, if they do want to audit, drop it, drop it in the virtual bankers boxes on the desk and say, here it is. This is what you want. And in terms of educating reviewers, ideally all the reviewers, and in most cases that I've ever experienced, the reviewers are actually really good domain experts in whatever the domain you're working in is. I've had some experiences where that wasn't the case. That is more difficult because you're trying to give them a PhD in data science or algorithm development, and that's harder, and it takes a lot more time. So there's a lot less ability to do that these days because there's so much time pressure on them, and so few human resources at CRA to get this done. So take that into account. All of it does mean that the audits are taking a little bit longer, and there's less of an iterative process. It's send us all your stuff. We're going to review it. We might have one round of questions. Other than that, it's probably going to go to a proposal. And the proposal can be, we're accepting it all. The proposal could be, we're giving it a 10% haircut. Then you can sign off and accept those things. If it's a 90% haircut, you may need to get the evidence bankers boxes out and go a little deeper with them if you can. So yeah, everything's taking a little bit longer these days. and there are more audits. Frankly, the first time claimant advisory service program is being phased out. I think it's probably done now. This was what even some of the CRA folks used to call a get out of jail free card for your first year. Doesn't really exist anymore. So it's either you're accepted as filed or audited. That education session is mostly gone, which means there are a lot more first-time audits too.
All right. Okay. So last thing, another time I want to emphasize on how important it is to track and document the activities that the resources that you're trying to claim for SR&ED are involved in, and what in terms of the information that is needed, what to track, and some of the best ways of capturing it. So first thing, as I mentioned, before you encounter a technological uncertainty or a problem, you don't really have a SR&ED project. So as soon as you encounter that problem, that's when you need to start tracking everything that is SR&ED related in a separate format, or your existing format, but make sure that it's intended for providing it to the reviewers in case you go through a SR&ED review. So that technological challenge, you can document it in Google Docs, Confluence, Notion, whatever, or the Employment Hero system if you intend to use it. The next thing that you do naturally is all the experiments and iterations that you go through in order to solve that challenge. That goes hand in hand with whatever project management tool that you're using, including GitHub, Jira, Linear, Notion, whatever it might be. So those are definitely valid and eligible ways of tracking activities. So make sure that those logs are kept in a way that are easier to be provided when it comes to SR&ED, because sometimes it's difficult to look for the ones that are related to SR&ED versus non-SR&ED. So if there was a tagging mechanism that you could implement, or else you could just take screenshots off of the ones that are related or not, whatever works, right? So you guys are the best judge here. Who worked on it? Again, like you need to prove like specific resources were involved. That's when it becomes much easier when you're using, let's say, a system of record like Employment Hero, because then you can use timesheets. You can also prove the costs and the resources that they were working on the project, because you have access to Employment Hero payroll, and that information is automatically linked between the experiments and iteration evidence and the costs and resources. So we need to find a way to link the amount of time that the resources spent on the project to the amount that you're claiming. And usually that comes in the form of either a total number of hours that they spent or a percentage of their time that was spent multiplied by the total salary that they were paid throughout the year. So using an all-in-one system like Employment Hero makes everything so much easier. And lastly, supporting evidence. Look, anything that goes hand in hand with the SR&ED project that you're trying to defend in case of a review, everything, if it's all kept in one place, it's probably the best solution for you. At the same time, sometimes you see, like as I mentioned, you have direct involvement, like development or testing, project management, and sometimes you have supporting resources and supporting projects that you're trying to do at the same time as your SR&ED project that might not necessarily be eligible work on their own. And those ones also need to be documented properly in order to be defended successfully. So just a bunch of examples of what you need to keep track of, and some best tips for that. Okay, I think with that, we're at the end of the presentation. Any last remaining questions? I know you guys were popping some questions in the chats. I'm pretty sure most of them have been answered by now, but if anybody has any more questions, we're happy to answer them while we have 5 minutes left.
The only one that I haven't actually been able to answer off the top of my head, and this is me just having not enough coffee today, is the percentage at which capital is claimable. I believe the percentage is 40%, so 40% of the cost of that capital is eligible for that increased capital contribution. but I'm just trying to find the reference, and I just can't off the top of my head. So I believe it's 40% of the value can be included in. But I would like to cross-reference that. But yeah.
Yeah, definitely a good one to have because like I know a ton of companies invest heavily into capital and in the past 20 years you weren't able to claim it. So it's very good to have that one back.
Yeah, especially, I mean, it really impacted the manufacturing industry, for example. Their ability to claim shred usually was based on, we bought this large piece of equipment and we had to make it work. But and if you can't include that in the eligible costs, it may change that equation as to whether you're actually going to buy that piece of equipment or not. I actually know a few folks in the accounting community who actually attribute, now it's anecdotal, I think, but attribute Canada's productivity gap drop to shred, the capital being removed from it. So I'm sure there's some data on that somewhere, but I could see it being accurate. In terms of, do you want to talk? I saw one in there about AWS, Ali, in terms of proxy versus.
Yeah. Yeah, so normally those type of so someone is asking, they spent a bunch of money on software that is supporting their project like AWS and subscriptions that you need to pay. In terms of those costs individually, usually you won't depends on the method that you use to claim shred. There is two different types. One is called proxy method, and the other one is called traditional. When you go through the proxy route, what you get is the CRA essentially gives you an overhead on each resource or employee that you claim, an additional overhead of 55% to account for all the overhead expenditures that you incur. So the subscription, AWS or else, usually falls under that overhead type of expenditure. And normally for a company of a couple of employees or more, it makes more sense to go through the proxy method because the overhead is just so much more interesting, the automated overhead. If you don't have that type of structure, then you usually go through the traditional route where you have to individually claim all the overhead expenditures, and you have to keep track of and the record of all the expenditures that you incur. And in that case, you would be able to include them.
Yeah, there was a question in terms of the forums, and I'd love to give you a date. I don't think they know the date. They don't generally even let you know what the date might be in terms of the forms coming out until it's legislated. It is very possible that the draft forms are already there, but and ready to drop as soon as the legislation does. It's been a year and a half since this was announced, so there was some time to do that work. But we still may not see it for a little while afterwards. And even then, frankly, with this big of a change, there may be things that change in those forms. So, for example, with one of the clean economy tax credits, one of the things in the forms where you're making an attestation about the assets that you're claiming, it was unclear. So there's some calibration that sometimes has to happen with those forms. The thing that actually impressed me about the director general and some of the folks working on some of these CRA changes or shred changes, excuse me, is and the clean economy tax credits is I heard them use the term minimum viable policy, which is an interesting term, but it spoke to the flexibility of we're going to try and work with taxpayers in these areas of transition to make things happen. And I have seen that. So, hopefully we don't get into a situation where people are having to manually fill in boxes and submit their homework and the calculations. We had to do that with some of the clean economy tax credits. As I say, hopefully we won't have to do that with this.
Okay, guys. Yeah, if any of you have more questions, feel free to scan the QR code and reach out to us. And otherwise, we're at the end of time. So I wish you all the lovely rest of your day.